What up, Hyperchange? Welcome to another episode. Today we are talking about Tesla's crumbling share price. As I'm recording this episode right now, Tesla is at $255 per share. The stock has been an absolute bloodbath these past couple days. For reference, Tesla shares were trading about $315 per share just 5 trading days ago. Now they're at $255 per share, a decline of about 19%. This is a pretty dramatic pullback. This is the lowest Tesla shares have been in over a year. There's a ton of negative headlines hitting the press about the company. So I've been reading into the news this morning, and I wanted to give you guys my take on what is driving Tesla shares to these 52-week lows. And then after that, I'm gonna give you guys my analysis on what I think is coming next for the company. So let's start out with the first negative piece of news that came out about a week or two ago, which was that a Model X driving on the freeway was involved in a pretty nasty car accident that resulted in the driver being killed. You know, this is really unfortunate, tragic news, just a really ugly accident. There's still a lot of questions about what caused the accident and whether Tesla's autopilot self-driving system was activated at the time of the crash. Now there's been an investigation that has been opened up into this crash that is still ongoing. This is very, very much a developing story. I believe the market hates uncertainty. This is potentially very bad news depending on how the investigation turns out for Tesla. So I believe that is sort of a looming cloud over the company. Then on Tuesday, things started to get much, much worse when Moodys, the rating agency, came up with negative headline number 2, which is that Tesla is about to face a major liquidity crisis. Moodys downgraded the company's debt, said they're in a much worse financial position now because the Model 3 ramp has gone a lot slower than anticipated. Moodys believes that this will require Tesla to raise significant capital to not only repay back debt, but to also be able to just fund their operations. Moodys estimates that Tesla will probably need to raise somewhere around $2 billion in the very short term to be able to figure this all out. And so, you know, this news was not helping, and the timing probably couldn't have been worse. Of course, the Wall Street Journal picks up on it, comes out with a headline, the clock is ticking faster at Tesla. And so then all these negative headlines start coming out about how Tesla is facing bankruptcy, how the company's losing money. None of this is really new news. You know, Tesla's financials are public. It appears as if things have just hit a breaking point where now that the quarter is getting to the end, people are thinking about what the results are going to look like for this quarter. And with Model 3 production still being so underwhelming, you know, the losses are still going to be massive. Tesla's debt obligations are rising. Bloomberg Gadfly has some incredible reporting about this. I'm going to put all these links in the description, but they have this really fascinating report that was put out on March 23rd that talks about the facing liquidity crisis that Tesla is going through. And they have this awesome chart of the potential debt obligations that Tesla has upcoming. And as you can see, you know, in 2018 and 2019, they combined to almost have $2 billion worth of debt due that they're probably going to need to refinance or pay off. So in addition to the core business losing potentially a ton of money as they ramp Model 3 production, they also have debt that they're going to need to pay off. And what's crazy is Tesla already has so much debt that if you take a look at this really interesting graphic that Bloomberg made, which is the percent of interest expense as a proportion of gross profit, you'll notice that hit a record high of nearly 35% of Tesla's gross profit goes directly to paying interest as of Q4. And, you know, I don't see this being an issue if they ramp Model 3 production, but if they don't, you know, things are appearing to really start to hit the fan financially for Tesla. And it's not just, you know, investors getting worried. It's not just Bloomberg getting worried. Why Tesla stock is getting hit so hard is because these fears and the skepticism has transcended into the bond market. Once again, Bloomberg Gadfly coming with some incredible reporting here with this chart that shows the risk premium on Tesla's bonds relative to the same maturity US Treasuries. So basically what this is telling you is the wider the risk premium is, the more, you know, risk of bankruptcy or default investors are pricing into Tesla's debt. And as you can see, the risk as default relative to the benchmark hit the highest it was ever at 443 basis points on Tuesday on the back of this Moodys downgrade. So, you know, bond investors are freaking out. And I typically like to think of bond investors as pretty smart money because they're actually calculating the cash flows of the company, really analyzing whether they'll be able to get paid with their money back. So, you know, seeing the bond yield spike is not a good sign for the overall financial health of a company at all. 443 basis point number was as of Tuesday. Today, Wednesday, the 28th, I was looking at a Barron's article that claims that the spread on those same bonds has risen to 481 basis points or 4.8%. So the situation is just getting worse. So that is kind of what exactly is going on here. Investors are concerned that, first of all, this autopilot crash is going to be, have some sort of negative consequence for Tesla's autopilot program. And then reason number two, Tesla's facing a major liquidity crunch. They're gonna need to raise money. Taking a step back, Tesla's strategy has been to consistently sell stock. They are in startup mode and they need a lot of capital to grow. And I haven't necessarily been opposed to this strategy because Tesla's actually been very efficient with the money it's raised, in my opinion. To put things in context, Tesla in 2010, when they IPO'd, had about 95 million shares outstanding and did about 116 million in revenue. Their revenue per share was a little over $1. 2017, 7 years later, Tesla's outstanding share count had grown to 175 million, almost a double in those 7 years, but revenue went up about 100x from 116 million to 11.8 billion. So in this 7-year window, Tesla's revenue per share went from a little over $1 to over $67 per share. So, that just gives you guys a scope of how Tesla's been able to compound a revenue per share and, in my opinion, value per share over the past 7 years despite continually diluting. I'm fine with Tesla's business model of diluting, but now the media has sort of spun it as, oh my God, Tesla's gonna need to dilute, let's freak out. And normally that wouldn't matter if the stock price wasn't getting hit, but because the share price is declining, this is almost becoming a self-fulfilling prophecy. Because as the share price declines, Tesla needs to sell more and more stock to be able to raise the same amount of cash. Just to put things in context, if Tesla sells 1 million shares at $300 a share, they raise 300 million. If they want to raise 300 million with the stock price at $255 per share, they have to sell 1.2 million shares or something like that and dilute shareholders even more. So this is sort of like the downward death spiral that could easily occur for companies like Tesla who are reliant on the equity markets for funding themselves. And so, this is a really important moment to just appreciate the fragility of Tesla's business model. They're growing 100x revenue in the past 7 years, but that has left them with a ton of debt that they need to refinance. That's left them burning billions of dollars. That's left the market very questionable on whether they'll ever be able to make a profit. There is a ton of risk associated with Tesla, and their finance model is pretty, I don't think it's rock solid at all. Like, this is a startup. Shit can go wrong. Tesla could go bankrupt. That's a very real possibility. And I think we're seeing, some of these weaknesses come to the surface with this mega stock price decline. So that all being said, there is a little bit of good news that I want to leave you guys with. Amidst all of this crazy turmoil and people wondering what the hell is going on with Model 3, it seems that people have forgotten to actually look at the data. Because if you'll check out the Bloomberg Model 3 tracker, which is one of the most accurate ways to figure out what's happening in real time with Model 3 production, today, the same day that Tesla stock's hitting a 52-week low, Model 3 production, according to Bloomberg, has hit an all-time high of 1,026 units per week. That's over 50,000 units per year run rate. That's the highest Model 3 production has ever been. And I think this number is only going higher. If you remember last week, Tesla released 2 new batches of record VINs, which indicates there are a bunch more Model 3s coming off the production lines. Bloomberg admitted that their model was a little bit delayed and lagging and was going to take some time to integrate all these big new production increases. So I think that's exactly what we're seeing go down. And I think Bloomberg's Model 3 tracker, which is at 1,000 per week now, is going to continue to climb. So, amidst all of this turmoil about how the Model 3 is never going to be produced, it's so delayed, nothing's happening, Tesla needs money. Tesla, the company itself, is actually pumping out more Model 3s than ever. We're going to get a ton more color on exactly what's going on with Model 3 production from the company next week when they report their Q1 delivery numbers. So the entire market is on the edge of their seat waiting for that press release from Tesla. I'm just sort of in wait and see mode to figure out what the hell Tesla's going to say. But my gut instinct says that Model 3 production, we're sort of out of the woods. We're over 1,000 per week. We're ramping really quickly. Biggest problem here and flaw with Tesla has been their communication strategy. 1,000 Model 3s per week is over 50,000 a year. Tesla only delivered 100,000 cars in all of 2017 across their whole lineup. They're already producing Model 3s at a 50,000 unit run rate. If Model S and X stayed flat and they just held Model 3 to 1,000 per week, deliveries would increase 50% in 2018. That is pretty strong growth, growing way faster than any other automaker that I could think of. But the real problem with Tesla has been their communication. They set this goal of producing 2,500 Model 3s per week by the end of Q4, then it was the end of Q1. They keep pushing back these deadlines, and the market is now focused on these deadlines, which are incredibly ambitious, which Tesla keeps missing. They're losing so much faith with their investor base. Even for Tesla's standards, this is getting a little bit absurd. As a shareholder, I'm incredibly frustrated. There's such an easy fix to this. Like, is Jeff Bezos on Amazon.com's conference call? Nope. Should Elon Musk be on Tesla's conference call? Nope. He has proven time and time again that he runs his mouth, says things that cannot be achieved, that are way too optimistic deadlines. Like, it's okay to do that a couple times, but now Tesla's a company with so much scrutiny. Moodys, the bond rating company, is watching the words he says, downgrading the company's debt because he's missing these deadlines. They're not looking at the production numbers because they're just looking at him missing his own estimates. And then that is causing to a declining share price, which is going to make it harder and harder for them to raise equity. So, I think we're starting to get to a tipping point where Elon Musk running his mouth with these ambitious targets is starting to bite him in the ass. They need to hire somebody to be in the room to be like, shut up, Elon, you can't be on the conference call because you're just fucking us over. Like, I think if people were looking at the production numbers for Model 3 and said, wow, they're at 1,000 units per week. This is, faster than they scaled Model S to 1,000 units per week. This is faster than they scaled Model X at 1,000 units per week. They still have this tremendous backlog. They have solar roofs. The battery division's crushing it. They're going to report by far record revenue this year. I think that's what the market would be paying attention to. The Model 3, despite all these production bottlenecks, is by far the best-selling electric car in America in the first 2 months of this year. The Model 3 is crushing it. It's gotten rave reviews, but nobody's paying attention to that because they're just paying attention to these deadlines, which are consistently getting missed and delayed. Tesla and Elon Musk specifically has shot himself in the foot by taking away the public's attention from the facts, which are crushing it, Tesla's brilliant execution, and pointing to these crazy delivery targets so before I was sort of on the fence of like, well, he's pulling it off. The stock price is still at 300, so he can still raise capital. So I guess he knows what he's doing. But clearly, people are running out of patience. I don't know. I'm just really frustrated by Tesla's communication strategy. I think it could be really easily improved. So that is what it is. Also, just wanted to end the video on this note that, Tesla is the only stock that I own. I'm out here hodling. Crypto reference for those of you guys who don't get it. I'm a long-term investor. I want to be in this company for the next 5 to 10 years. I think they are attacking an incredibly massive opportunity to not only electrify our transportation system, but to electrify the electric grid. Then beyond that, to have our transportation system go autonomous as well. I think Tesla, the battery company, is just in the very early stages of disrupting so many different industries. Elon Musk, although he runs his mouth and has got me a little pissed off today, is an incredibly visionary CEO and an amazing leader, and I wouldn't want to have my capital with anybody else because I feel like he is so committed and has so much perseverance and persistence. He'll be able to get through any problem that Tesla has. So, I really do have faith in the company. I'm not selling a single share. I'm broke myself because I'm funding the show you're watching, Hyperchange. If I had money on the sidelines, I wish I could be buying Tesla stock at 52-week lows. I'm a big follower of Warren Buffett. Be greedy when others are fearful. I think that's a really important mentality to have here. So, I think amidst all this chaos, it is really important to take a step back and realize that Tesla has actually made a ton of progress on Model 3. The company has gone from $100 million in revenue a year when they IPO'd to, over 11 billion last year, maybe over 15 or 20 billion this year. So what Tesla's done is really impressive in the long-term scheme of things. Also, please remember to read my disclaimer at the bottom of my videos. This is not financial advice. I am not a financial advisor. So, please always keep that in mind. Also, I would love to know what you guys think in the comments of this video. I mean, the Tesla community has got to be going crazy over this. Any ideas that you have about why Tesla stock could be declining, what's going to happen next, I would love to hear it. So please let me know. Anyway, this is Hyperchange. See you guys next time. Peace.